Hello, everybody, and welcome to the monthly market memo for the month of June 2025. I'm Case Eichenberger, the Chief Investment Officer with Retire Path Advisors. And in today's short video, we wanted to walk through some of the key themes that investors were paying attention to for the month of June, talk about the returns that were had, and address some of the key questions that came across our desks here for the first month, official month of summer. So let's go ahead and get started here. And the first key theme, and this kind of blends into the next couple themes, really was investors are feeling much better about the economy and therefore the stock market after all the tariff rhetoric that occurred in April. This has really settled down since May, and it continued really in June. As we show here, this is the odds of a recession that are priced out in various markets right now, and you can see how it was up towards well over 50%, almost 65% in April coming into May. Then it really started to fall, and therefore you started to see stocks really start to rebound and gain after the recession fears, after all that trade talk had subsided. We sit now at about a 27% chance of a recession, and this has really just moved dramatically lower from that top part in the end of April, beginning of May to right now. So investors are feeling much better about the economy. We're also feeling better about inflation. Now, this is also a key theme. Obviously, this is what really went up in 2022 and after COVID and everything. So the path of future inflation is very important for the stock and the bond market. And investors have really started to pay more attention to it and have focused on future inflation being a lot lower. As you'll see in this chart, inflation's expectations for 1 year ahead, for 3 years ahead, and for 5 years ahead went up for most part in April there, and then they came back down here at the end of May. So inflation expectations coming back down are really good for stocks and bonds as well. And to just really kind of show you how this all worked out, this really has culminated into strong returns for the stock market since the bottom, which was April 8th. So looking at that from that time period to just a couple days ago, we are up 24% in the stock market in just a short number of months, which is just quite spectacular, considering where we started the quarter at, right? April was just really tough. May, June was really good. In fact, for June, we got the numbers in just now. The S&P 500 was up over 5% in June alone. Small caps were up also over 5% in June alone. International stocks, which has been a great market this year, were up over 4%. And then bonds even were up 1.5%, all in just the month of June. And since the bottom here in April, stocks are well up over 20% and back at new all-time highs. At the end of the quarter here, at the end of the month, June 30th, we reached a new all-time high again in the S&P 500 and other various stock markets around the globe. So very much good news here for all of us investors that are depending on asset prices to move higher to fund retirement or to fund various goals over time. One thing I will say is that one of the key themes that was happened overnight, over the weekend, and then has kind of been de-escalated from here was the Middle East conflict between Israel and Iran. Of course, that has really ramped up. And then the U.S. went overseas and dropped some bombs on Iran's nuclear facilities as well. And really, you would think that would probably increase oil prices, that would cause stocks to move lower and bonds to move higher. But honestly, that really hasn't happened here, and stocks really shook that off and moved higher after those couple days since those bombings took place from the U.S. over in Iran. And what I wanted to show here was just this chart that we often cite, and really is just looking at various wars over time, right? Since 1928, World War I, World War II, Middle East conflicts, terrorist attacks, whatever it may be. And you can just see that the takeaway here is short-term uncertainty is always going to be there, but the market is resilient and does find new highs over time. And then lastly, one of the key questions that we've been getting across our desk here across for the month as I wrap up this video was, now that markets are at new all-time highs, should I wait maybe for a pullback until I invest some more money? So basically, the question is, I have cash or I have a dollar cost average. Should I put that on hold and wait for a little pullback, or is all-time highs maybe actually a good thing to look for? Um, the research shows that investing now is always most preferable. For long-term investors, actually all-time highs are very bullish. Now, this is kind of counterintuitive, but this is just how the numbers work out. If we look at investing at an all-time high and then investing on any other day in the S&P 500, what are the average returns going forward? And this is the key question. 1 year ahead, on average, up over 9.5%, investing at an all-time high. All other days, around 9%. 3 years from now, 29% at an all-time high, 27%. You can just see that they're actually very similar, and even investing at all-time highs is actually a little bit better. That is a bullish signal. That is a new bull market signal, if you will. It does happen quite frequently in bull markets to continue to invest at all-time highs. So do not be scared to put more money to work here. Do not skip out on any dollar cost averages if it's part of your plan with your financial advisor. Investing at all-time highs, which is where we're at, is actually quite bullish. So that is the video for June. We'll look forward to talking to you in July at the end. We approach the active management of your complete financial landscape very seriously as a trusted steward, advocate, and confidant. We are completely committed to you, the client of Retire Path Advisors. Always reach out to us with any questions, myself, your advisor included, at our numbers and websites here. We have a lot of good resources on the website as well. I write a lot of blogs that you can find out there on various aspects of the markets and investments. I encourage you to check it out. And have a great 4th of July Independence Day. We will talk to you in about a month. Thanks again, everybody. Take care.